Yeah, morning, Trey. So a fairly lively trading session playing through. We've still got the VIX above 20%, but ultimately, some gyrations that we need to focus on. Now, if we have a look ahead at the session that will be, we are expecting the ASX to open modestly lower, some fairly soggy calls at the moment, with the ASX expected to open about 30 basis points lower, the Hang Seng down about 90 basis points, Japan fairly flat. If you actually look at the net change in S&P futures from where Asia closed to where they are now, they're very, very modestly lower. So again, that's just sort of impacting those calls. If we have a look at the data that we've got to focus on in the session ahead, we've got Aussie and Japanese PMI numbers, not expecting anyone to really focus on those. In the UK, we've got the remaining partials of the job numbers there. So we've got jobless claims and claimant counts coming through. But I think the big ones there are going to be the PMI data series coming out of Europe at 7 o'clock, and then the UK PMI numbers coming out at about half an hour later. I think the service numbers are going to be very, very important. Obviously, they've been in contraction recently, so we'll see if we get a surprise in either one of those, and that could throw the pound and the euro around a little bit. We've got the S&P PMI numbers coming through. The market sort of picks and chooses whether it wants to run with those at any given time. But again, we could see them being reasonably influential in this market. And of course, we've got Microsoft and Google who will be coming out with earnings after market. I think, we've seen a bit of buying in both of those stocks, which has supported the NASDAQ to an extent. I don't think anyone wants to be left behind if either of those stocks, certainly Microsoft is a bit of a market darling at the moment. And you can see if you don't want to be left behind. So if you're a bit of buying, which is supporting the NASDAQ. But arguably the story of the day, if we're setting the platform now for understanding what the news is the move that we've been seeing in the 10-year Treasury. We sort of saw that trade up to 501. A few buyers stepped in and we saw yields move down to about 498, where we saw the headlines then breaking that Bill Ackman had covered his short position, saying there's still too many risks in the world. And we saw yields trading from 498 down to 482. 30-year Treasury sort of followed in sympathy on the back of that. And we can see the net change at the long end of the curve down about 7 basis points to the downside. So a reasonable reversal playing through. And I guess, obviously we're looking to look at those lows of 482, see if we can take those out in the session ahead and see that follow through buying playing through. Two's pretty much unchanged. We're not seeing much moves in terms of rate expectations, and real rates are pretty much unchanged. I guess the other news is that the UAW have suggested that another 6,800 additional strikers are going to come through on the auto side, and that's sort of just maybe weighing on the perception that we may be seeing lower growth or slower growth coming through in the Q4 numbers after a very strong growth that's coming through in Q3. Now, in terms of the equity tape that you can see the S&P cash session. We opened in the cash market in the US and traded down about 80 basis points. Things are looking pretty sinister at that stage. But then obviously that move that we saw in Treasuries with good buyers has propelled the equity market a little bit higher. We did see a bit of a meltdown into the close. So we are seeing equity markets, or certainly the S&P, closing on a fairly flat note. But if we have a look into the actual breadth that we've been seeing, 27% of stocks were higher on the day. So fairly poor breadth. We've seen service names doing all right, tech's done okay, and discretionary's done reasonably well. But on the bottom of the pile, you can certainly see energy and material stocks are lower. And you can see obviously that crude price is down about 2.5%. So a few sellers playing through there. On the FX side, you can see the dollar once again being shunned. It's really very interesting to see what's happening there. But certainly very good buyers playing through in euro dollar. We've seen that trade up to 106.78. Now, some people have mentioned about the spread situation between sort of long end bunds and treasuries. Well, it didn't really matter when treasuries were widening in terms of the yield premium relative to bunds, but apparently it does now. But we are seeing US Treasury yields come down about 5 basis points in 10s relative to bunds. And actually, we've seen Italian BTPs close about 7 basis points relative to German bunds as well. So maybe that's helping the situation. But we've also seen good buying in the pound as well. You can see that's made a nice move up. And also the Kiwi dollar. So generally, I think this is a broad US dollar move as yields move lower. It didn't matter, as I say, on the way up, but apparently it does now. So that's an interesting one. And we've seen a few sellers in gold. I guess the other story of the night is what's happening in Bitcoin. Further court rulings coming through, making it final. But obviously the market's very, very high on optimism that we're going to see a spot ETF being declared at some stage very soon. iShares getting a CUSIP away suggests that they are very confident in getting their spot ETF away, and probably sooner rather than later as well. So we're seeing Bitcoin trade to the top of range. The question is, can it hold this range and actually kick on and maybe establish a new trading range, or will this fail respecting that top that we've been seeing? So that's a question that a lot of Bitcoin traders are going to be looking at today.